Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with a breakdown of the action in today's session, where we saw stocks mixed ahead of Powell and some key economic data, Ed. So all eyes are turning ahead to what could be a key turning point for the stock market.
Yeah, we're at a turning point, but we don't know which way it's going to turn. I want to take a look at three Dow stocks, though: Boeing, Chevron, and Goldman Sachs, which are all trading around buy points.
All right, we will do that. But first, let's take a look at the major indexes today. Leading the downside, we had the NASDAQ off by 0.6%. The S&P 500 down less than 0.2% today. The Dow closed slightly positive, just by 3 points there. And the Russell 2000 up 0.3% today. And something that we were talking about as a team a little bit earlier is, ahead of key Fed statements or economic data earlier this year, we had rallied into that. So maybe it's a good thing we're seeing a pause here, so we're not as tempted to be making new buys if we get a negative reaction come tomorrow.
Yeah, I mean, that's a silver lining you can take from it, obviously. Yeah, the NASDAQ's not looking so great, coming back toward its 50-day line, below the 21-day. Definitely seeing a lot of pressure there. I mean, some of that's the big caps, but also even if you take away the big caps, I mean, a lot of the leading stocks have struggled. I mean, once again, stocks are flashing buy signals and then coming back. So that's an issue. But yeah, the QQQE, which is equal weight, not as bad, still coming down. Definitely growth stocks not having a great time. But it's been a little bit tricky once again. And I think that's, probably investors should not be adding to exposure really until we get a little more clarity.
Well, let's take a look at the S&P 500 as well. We've been talking about a new power trend that we have for the S&P, with it trending above a rising 21-day line for more than 10 sessions now. We did see a pretty hard hit. It felt like a pretty hard hit to kick off the week, and some resistance around this 4,000 level, Ed.
The 4,000 level, and once again the 200-day line. I mean, we really came close to that. If we end up falling back significantly from here, I don't think anybody will be surprised. You'll look at the chart and go, "Oh yeah, it's hitting that trend line. It's hitting the 200-day line, or getting right up to it." So, we'll have to see. Again, maybe if we just pause here, and then after we get Powell and we get inflation data and jobs data, and the market likes it, we might finally get through that decisively. But we just don't know until that happens.
Right. And let's also look at the Dow, which has broken above a downtrend for a couple of weeks now here. But maybe this 34,000 level, it's having a tough time now staying above. And since it's been the leading index over the last number of weeks here, Ed, does that mean this might be the one to watch for a stronger move down? If we do get the downside scenario to play out, might this have a little more oomph to the downside?
Well, it certainly could. I mean, it's unclear, because you can make an argument for why the NASDAQ, if bond yields surge, that those growth names sell off. Let's just face it. If we have a pullback here, I mean, this one could come down. There's a lot of interesting names in here. We're going to take a look at three. This is at a 7-month high. The pullback so far hasn't been, bad at all. And, it looks like it's still trending at a pretty strong uptrend here at 7-month highs. So have to watch for it, but have to like what it's been doing so far.
And we'll also take a look at the Russell 2000 via the IWM ETF. Now, some pretty clear resistance here, Ed, at that 40-week line, which is the sister of the 200-day line on the daily chart, you could say.
Yeah, and that's another thing about how the S&P, it's hitting resistance at the 200-day line, but it's not just Apple and the big cap techs.
Right.
The small cap is also hitting resistance there. Found support around the 21-day line, did rise. So that's one reason why it was a mixed day. Dow basically flat, the Russell up, and the S&P and NASDAQ down.
A couple more ETFs we want to check in on. Here's RSP. We looked at QQQE, the equal weight for the NASDAQ 100, but here's a look at the equal weight for the S&P 500. So this further emphasizing that point, Ed.
Yeah. Big caps are really struggling in that front, but this needs to get decisively above. It can get above last week's highs, which would probably mean a lot of other things. Like that would probably mean the S&P would probably get above its high, at least above the 200-day line. So, but this is nice action, not a rip-roaring rally either.
Yeah, something we're keeping a close watch on. Also, let's take a look at XLI, industrial stocks. XLI here up about 0.6% today. Looks a lot like the Dow, but what should we be focused in on in this chart, Ed?
Well, I mean, yeah, it looks like a lot like the Dow. And like the Dow, it had that resistance around with that August level. And in here, it's around 101. And so it's right around that area. I think it also shows you that the Dow that's not it. I mean, while it's often we go, okay, it's 30 stocks. I mean, really, they can go up or down, but it really is, it feels more indicative of a lot of strength in the market. That there's industrials, there's, miners, there's financials, there's another sectors that are doing well that the Dow is heavy in. And so this is a sign of that.
Right. Good point there. And let's also take a look at the PAVE ETF showing very similar action here, Ed.
And there's some overlap, obviously, but it just wanted to show some of these areas. Definitely a lot of stocks, in these areas that are worth taking a look at, or even just the ETF itself.
Yeah, and you mentioned financials, XLF. That's pretty much been riding its 10-day moving average on the way up in this rally too. So yeah, as you mentioned, couple of areas for us to look at there. Well, let's take a look at 3 Dow stocks for your watch list, starting with Boeing, ticker BA here. Since its quarterly earnings report, it's been on quite a move, even though that day had a bit of a wild reaction, but it's quieted up here as it trades nice and tight.
Yeah, a few days after that earnings report, it came out with a positive outlook. And it is a turnaround. After 4 years of losses, next year it's supposed to be profitable again. So there is that situation. The volume has really dried up in this little pause. So, I wasn't that excited about this when it first came up to the buy point because it looked awfully extended. And I'm not saying it is. It'd still be nice if the 10-week line, 50-day line could catch up. But at least if you look on versus the 21-day line, that's getting close to catching up. So trading tightly at this point. So if it moved out, you could certainly understand why you could take an action on it now using the 21-day line. This is on Swing Trader. It isn't a 3 weeks tight, but it has a lot of that feel. So this positive action in the last several weeks here.
That it is. And moving on, let's take a look at CVX. Oil major here trying to hold its 21-day line, closed below that level in Monday's session, but did not undercut its low from that reversal day last week. So I guess that's a positive. It's also around a round number at 180 and maybe even working on a little trend line entry here as well.
Yeah, and that trend line entry would correspond basically with the buy point, the old buy point of around 182.50. So it sort of works out however you want to do it in there. When this came out, the early entry was probably the way to go when it first came in, right around there, or a trend line, however you want to do it, somewhere in October, offered an entry because when it got to the buy point, it was pretty extended. But now the 21-day line is obviously caught up. It's trading right on there. It's not even really extended from the 50-day line. It'd be nice if it came closer. Don't get me wrong. It's not super close, but I think it's around 6% or 7% above that. So it's not extended yet. So it'd be great if it could consolidate more, but obviously this is very much at the whims of oil prices, natural gas prices, gasoline prices, and oil prices and energy prices generally trended up today. But yeah, it's been a weak time. And I will note that this weekend we have the OPEC meeting, and then we have around the same time, there may be European Union may set an oil price cap on Russian oil. So that could have an impact on prices. It's almost like a big earnings report for crude oil right there.
It is. So that's definitely something that investors should keep in mind with this sector. Let's also take a look at Goldman Sachs. Speaking of financials, actually, you know what? This kind of looks like Boeing a little bit here. Strong move after the earnings report, had a breakout and is now trading nice and orderly in a sideways fashion in some quiet volume.
Yeah, so it almost says on a daily chart, So it cleared this bottoming base, as you say, it ran up, and now it's consolidating. It's more of a shelf, yeah, it's above the buy zone, unlike Boeing.
Mm-hmm.
The 21-day line is catching up. On a weekly chart, that recent consolidation now looks like is a handle on a big cup base. Now, aesthetically, you'd like to see a longer handle. I mean, just more of a shakeout, and it would be nice if it were downward sloping a little bit more too. But you have that combination, so that's setting up. It's just another one here to be looking at. Again, it was sort of quiet. It's like, oh, okay, some of these were rallying off the bottom, and you sort of ignore them at first, and it's like, oh, they just kept on moving, and really nice moves for a number of these Dow stocks.
Yes. All right. Well, thank you for that roundup, Ed. And thanks so much to everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, and we hope you join us. Investors.com/IBD Live for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.